please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Andrew, what about NBFCs? Because we have a higher cost of funds that we're probably going to reckon with soon enough, and maybe some amount of competition because of, say, the easier norms which have come in from the Reserve Bank of India when it comes on to affordable housing at least. So all in all, do you think that maybe things could get a little tougher for NBFCs from here on?
I think a little tougher. I don't think it's, with just the small hike that we've seen, it's going to be a real big problem for them because the growth is just enormous. And, fortunately, the PSU banks can't compete in any of these sectors because they have no capital to do so. So there's lots of market share as well as growth in the market as well to enjoy. So I'm a little less worried about that than I am some of the other macros which will hurt the banking sector.
Sure. I mean, you've maintained that you could rent PSU bank stocks. I don't know if you could do that now, or you'd agree with that view now. But in terms of trades, long, short, what would your top bets be?
So, it's been pretty boring for us in terms of repeating ourselves, but we've kept with the private banks, we've kept with FMCG. Obviously, IT would be a sector which will be beneficiary of a further kind of depreciation of the rupee, and selective autos, and that's really where we've been concentrating, and that's really what's paid off. There's a little bit more noise about corporate capex picking up. We're not totally convinced yet, but I think that could be the new kind of area which will excite investors. We're all looking around for for sectors which will give us some upside, and unfortunately there's not that many which will continue to deliver. So looking for new sectors. I mean, obviously today is the Farmer Day, and everyone's getting excited. I'm kind of less excited. With pharma, just to go through it, the pain has just begun. And if you go back and look through, say, the telecom sector or the IT sector a few years back, when they were going through the similar kind of start of the pain, you'd have bouts of kind of the stocks looking better or some good news, but it quickly evaporates. The bad news comes back again, and then the share prices fall. So I'm not a buyer into this pharma. I'm not even a buyer because the rupee is depreciating either. I think they've just got some real big problems which they've not faced yet, or not actually challenged themselves to face. So that's one sector which we will continue to ignore for some time. PSU banks, whilst we'll see what comes out of the meeting today. Again, there's no real scope for them to do very much, even if they get even more capital. They just have to kind of, just keep them afloat rather than anything else.
What about the IT space, Andrew?
So the IT we've been quite bullish on for some time, partly because the pain has been taken by the sector, and valuations became more reasonable. And one of the things that we were looking for was either give us back some money through dividends or buybacks, and the combination of that means a higher yield. And that's what they've been doing. So that gives us, a little bit more kind of breathing space whilst they, start to kind of build, the growth back into their companies. And obviously the rupee will help. It'll be a tailwind for them in the short term. So it's a great place to hide, because if I'm right in what I said at the very beginning, then you're going to need places to hide.
Okay, all right, Andrew. Always a pleasure listening to you. Thanks very much for joining this evening.